feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 yo, go, go.
All right. Good afternoon, good evening, traders. This is Rev Wood. I go by SageFT online. I am the creator, founder, head trader, commentator of the live trading desk, Monday through Friday, 8 a.m. to 4 p.m., live on all social medias. All right, let's just get right into this. First thing we want to look at the range on Friday. Saturday was for review, and today you are reviewing what you're going to work on for this week. Let's make sure we have our notes wrote down. Make sure we follow our plan. All right, now here's my synopsis on this. Retail traders are expecting the next leg down after a 6% move. Down, right? That's the keyword, down. I think we're going to see a bounce. Now, am I going to just all of a sudden just buy when we're in position 1 down on the KISS chart for the daily 4-hour, 1 hour, 15-minute, 2-minute, and all the way down into the micros time frames? No. Absolutely not. No. What I'm going to do is I'm going to, if we get a confirmation of something says that we could bounce on a smaller time frame, that's what we're going to look for, right? There's just the scope of this video. We'll get into the review here in just a second, but most people want to know what the heck is going to go on next week. All right, so just to get this out of the woods here, what I think is going to happen is we could open up or down on a 200-point gap, up or down, and I believe it doesn't matter which way it gaps, they're going to find value, right? Now, here's the hard part, right? Where's the value? Because the NASDAQ just fell off a cliff, okay? Much greater than the S&P. All right, so we've got, the ES has gone from 6,200 to 5,100, right? So that's what, 18%, 19%? Okay, and then on the NASDAQ, we've gone from 22 to 17.5, 22.5 to 17.5. That's 5,000 points off of 22. That's a good 20%er there, right? So, yeah. Oh, yeah. Okay. So, well, that puts the NASDAQ in bear market territory very quickly. Now, I want to give you my opinion on how fast bear markets come and go, and why I believe they will move quicker than our grandfather's bear markets. Okay, here's the reasoning. Latency, right? Because the speed of transmission. You don't just call your broker. There's millions of computers trading at fractions of a second this whole time, and eventually they're going to find value. Now, do they find value all the way down here? Maybe. How quick? I don't know. At the rate they're going here, they could do it by Tuesday. Okay. Most people think, here's what I used to think. Okay, when I was a losing trader, I used to think, all right, so this has to continue. Okay, I used to use the word must, has to continue. There's no way it can sustain. It has to, or there's no way it can go up. It has to sustain. No, it doesn't. The odds of this going down another 6% in one day, probably less than 0.1%. Now, the odds of it going up 5%, 3%, 6%, 8%, 4%, very high. Let's talk about the elephant in the room. What about the green on the roulette board? Right? 0 or double 0. 1 in 37, 1 in 36, right? So 1 in 36, 1 in 37 chance this thing's just going to sit here sideways, right? So if we get a sideways move here, is it a 3-bar play or not? That's what we're going to be watching. This is either a continuation or an exhaustion, right? It can't be an ignition. Here's the ignition. Here's the ignition. Here's the exhaustion. Right? Continuation. Whale number 1. Right. So now let's go into this line right here. So let's bring this line into play. Let's make sure I'm grabbing the right one. Okay, now what I want to do is I want to extend it down. Watch this. Don't lose this line. All right. This line will come into play here in the next, let's say either tomorrow or the next couple weeks or something like that, or a couple days. This line is in play. This gap, I'm gonna remove a bunch of this stuff here. Now, the way that we want to look at this is somehow we've got a massive inefficiency, and the CME, they don't like that stuff, right? So they say, well, we're going to pride ourselves on getting rid of this inefficiency because it has to be efficient. So what we're going to do is we're going to be watching if it bounces 550, 5550, 5672. Okay. If we keep sliding, let's just get the elephant in the room out. All right. We have broke every breaker block possible. Does it mitigate? Okay, or do we just straight slide? Now, let's bring this one into play. Let's bring in this. Here's our line, right? So if we have this line and this line, well, we've got a real good possibility, okay, of 505050 505050. We got a 5050 505050. Did you catch that? We've got a 5050 505050. All right, that was silly. Okay, so that's what we're watching. All right, now I know I probably should have done the look forward in the after, so you guys stay for the review. But let's watch the review for just a minute here. We'll get up out of this business. All right, so you guys know what happened. The record range, right? Because as the price expanded into the 6,000s, for it to go 7%, it has to go 400 points, roughly, right? So think about how that works. As we got through the 3,000s, 4,000s, 5,000s, 6,000s in the the front handle, when we get a 7% move, that will create a circuit breaker. It's a much larger number, and so that's why we're seeing that record range. That is massive, right? So let's talk about range and how to use it. Perfect. When we're narrow ranged, okay, you have targets. You're trading in a range. You're not expecting range to expand as highly in terms of probability and protection. Okay, but once we start to expand, here's how we want to do this. People always say, "Well, when do I trail?" Here. Okay, when we expand range, because what I want you to do is I want you to, instead of trying to get 50% of 32 points, I want you to get 10% of 360 points. So when you get the chance to trail, this is when you take advantage of it. When it's time to step on the gas is when not just volatility expands, okay, but when range expands, the ATR as well. Okay, so looking at last week, it was a bounce. I know there's still a lot of drawing on here. Okay. It was a bounce off of this line until this bar right here. Okay. This was his major pivot. This was Mancini's major pivot last week. You get right. We started here. Okay. It comes up into here. Slap, chop. Goes back to position 1 on the 4-hour chart. All right, so let's take a look at this level right here. That's April 2nd, April 2nd, April 2nd. Okay, let's go to April. Okay, so here's how easy it is. April 2nd, 15-minute goes back into first position. We wait for it to come back into first position, first position, first position, first position, first position. First position, first. Okay, so I'm being silly, but you catch the point of what I'm saying. What we want to do is we want to trade the 15-minute time frame, enter on the 2, snipe on the 1 minute or the 30-second, right? The way that you get caught, let me show you how this works. And the way that you get caught and the way that you have to keep moving your stop and moving your stop and moving your stop is you're not traders that are not yet successful. Okay, what they're doing is instead of them trading here on any chart, 15, 2-minute, 30-minute, 1 hour, 4 hour, instead of them trading here after a draw on liquidity back into position 1, okay, what they're doing is they're saying, oh my God, okay, I'm going to try to, okay, it's still moving, okay, and then they try to sell here. Okay, this, first of all, this is a 3-bar play. You don't short into that, okay? But second of all, you have to wait for it to come back into the moving averages and then go back into position 1. You got to have the price going through the 8 under the 20 or 8 going through the 20 at the same time as price. Okay. Real quickly, let's take a look at the analog. Here's the analog. Okay. We want to trade when we're narrow state. Narrow state meaning, and this is Oliver Velez's term, right? I'm using it. Narrow state is when all of the moving averages and price is in agreement. That means everyone agrees that this is the price of the S&P 500 on the closing date of this contract. Why would we think we're going to make money when everyone agrees on the price? Why don't we wait till there's a disagreement in price and try to take advantage of the disagreement? Good, perfect. That's called the KISS chart. So in the live streams, on the right-hand side, you're going to see the 15-minute KISS chart. We're going to trade in the direction of the 15-minute KISS chart. This is what it would look like in terms of, doesn't matter if it's the 2-minute, 15-minute, 4-hour, daily, weekly, monthly. If you go back and you look on the charts, the dailies, position 1 down. So you just flip this over, 4-hour down, 15 down, 2-minute down. We don't want to trade against it, right? So let's take a look at this analog. Then what we'll do, and then we'll get out of here, is let's just look back at what is the lay of the land. What is the context for last week and next week? So what we want to do is we only want to buy whatever your buy pattern is when we're in position 1. Position 1 looks like this. It flips, okay? We were position 1 down here where when it's red, 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 you only go short. Okay, now when it goes here, you only go long. Green, 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 long. In this example, this is a much clearer example of when the price and 8 EMA go through the 20 at the same time is what we call a fractal. Okay, and then what we call position 1 is when the 20 goes through the 200 from a 200 flat state and pushes it in the direction. We want to only trade the next long signals here, short signals here, go back into position 1 here, only short here, right? So what we want to do, what I'm going to be doing next week is I'm going to be waiting for all of this to line up with my 15-minute chart. And I want my 15-minute chart to line up with my 4-hour chart, my 4-hour chart to line up with daily chart. So at this time, let's go ahead and take a look at what we should be looking at in terms of trend, right? Trend. Now, like I said, this could bounce because we are in an outlier situation. This is no joke. This is what trade wars look like. Okay. We are in position 1 down on the daily chart. Context down, but we are away, as Velez says, away from the 20, right? Just remember him with his glasses on going away, and he chuckles. Think of that voice before you think of shorting down here. Okay, let's go to the 4-hour chart and recognize we've got price 8, 20, 200, right? And so you can see that last week is a little bit of a quagmire. It was hard to see. We were still position 1 down, but where would we short? Look at this. Last week, position 1 down. We get to Mancini's major pivot, okay, which was 5743 from his Saturday letter, right? Touch it, and then it just completely falls apart. So then the bias is sell, sell, sell. Okay, but the problem is it's hard to get a good fill, and it feels like you're chasing because, as Adam Mancini says, there's no bid, right? So if there's no bid, the sellers are chasing, right? So that's what that means. And so if you're a big seller, how do you buy in? How do you get supply short if there's no bid, right? So this was the problem. This is what it looks like when there's no bid. So we get the gap. Everybody thinks it's going to run, and it starts to fall apart. We get through this line. It's nothing but selling, right? Even the news couldn't, nothing could help it. Let's go to the 4-hour chart. Okay, look at that. Same thing. Boom, right there. Shkabing. Sell only. You don't think about longs, and here's how you find the sells. You wait for the chart to be set up. Okay, position 1. See how we can fractal into this bad boy. We can come all the way in, all the way up and through here. Okay, that's where the 4-hour turns. This is where the 15-minute turns. Shkabink. Shorts only right there. Shkaboom. Okay. So, oh, well, yeah, but how did this work? How did this work? So you got a little bit here. Okay, you got stopped out. Okay, you got a little bit here. Okay, you got a little bit here. Trailed out. Okay, and then we wait for it to go back into position 1. Okay, now here's where people get screwed up. Oh, yeah, that one got me a little bit, but I got stopped out. Okay, so did you re-enter? Well, no, because, and it's like, okay, so here we are back into position 1 here. Okay, let's just keep going, right? So we're on the 15-minute chart. This was last week, right? This was last week. How many of these did you get? So the way that you look at this, yeah, I know some of these are in the middle of the night. I understand. European traders were just using this for illustrative technical purposes, right? So the way that you look at this is, were you able to capitalize? This is the 15-minute chart. Were you able to capitalize on the 2-minute chart every time we came back to the 15-minute, 20 simple? Because we're in first position. Here's the 200, here's the 20, here's the 8, here's price. Once it goes back underneath it, you sell, okay? Goes back underneath it, you sell. Yeah, but Rev, the time that I buy it, the time that I sell it, it doesn't work. The time that, okay, then you have not enough data. Okay, because look, bam, 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 bam. Now, did that work on the upside? Well, let's look. Well, We never really went to the upside because if you look at the context of it, all it was a pullback. But on the 15-minute, we did bounce where everyone, look, I got it all drawn in here from last week. Remember the narrative from last Sunday. Was this the V bottom? Was it the V bottom, right? So now let's just draw that level and let's answer that question, right? So then you're like, well, okay, I'm not sure if I'm supposed to short. Okay, so now you've got even more confirmation. We're below here, we break it, we come back through, we test it here, and it goes back into first position, shkabing, short, right? So that's how last week should have went. Long up into here, this bar was crazy. This bar told you. Now, to be very, 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 very clear, this bar happened after the market closed when Trump decided to do whatever he decided he was going to do. It wasn't a political statement, not a political person, okay? I'm a trader. This was devastation right here. Okay, this was what you call a hedge, right? So think about how this had to work. If there wasn't enough volume on the stocks after market for the funds and hedge funds to not take such a loss, all they could do is hedge in the futures market. That's what this is. If you're wondering how this worked, that's the computer models saying recompute, new data, new news, recompute, readjustment of value proposition, right? So they hedge their portfolios. Hedging. We are in the futures market. This is to hedge. One ES contract is 500 SPY. So if you've got $1 billion fund and you've got $300 million in SPY and the equivalencies, what are you going to do to hedge that as much as you can? You're going to jump into the futures market and you're going to go palms in, all you can eat, and you don't care if it's aftermarket, it doesn't matter. Your portfolio is greater, okay? Rule number 1, capital preservation, right? So that's what you see here, right? Then you see the gap, you see the relief. Okay, now when you see the relief and you don't see it start to, there's no spike. That tells you, okay, draw your line and go, okay, right, here we go. Okay, then we break below the line, test, can't get it. Now you're really starting to go, they're hedging every second of the day as quick as they can on any pullback. Now the big boys, now watch this. Now the big boys are in the 15-minute chart crowding it out. So now next week, we'll just go right back to next week one more time. Let's take a look at the news. Okay, there is some very, very important news at the end of the week. Okay, we don't have anything until Wednesday, 1:01 p.m. for the 10-year note. Thursday, we've got core CPI year over year, month over month. Okay, 30-year bond at 1:01 p.m. That's going to be absolutely important. You're going to want to see the subscriber rate for the 10-year and the 30-year. Okay, but Friday, we have core PPI, month over month, PPI, month over month. Okay, and then U of M, consumer sentiment, University of Michigan. That's Friday. Okay, so the two big ones this week, Thursday, 8:30 a.m., Friday, 8:30 a.m. So it's a hurry up and wait. Here's the deal. There's two things that they can do on a hurry up and wait scenario. Okay, the first one is they can jam it, they can cram it, or they can let it go sideways. Most people think that if it's hurry up and wait, it's just going to go sideways. Not in this environment. Okay, because even if we have inside range, okay, the inside range is going to be 94.5 points or less. Massive, right? So how would we play that? Get in lower Keltner, okay, get in upper Keltner, and trail. Okay, get in, if you're going to take a counter trend trade, okay, trailing, what you want to do is you want to have a target. Okay, when you're with the trend, that's when you can trail. All right, everybody, let's be safe next week. Let's not think that this thing's just going to absolutely slide. Okay, the worst thing you can do as a trader is say, oh, it's going to slide. It has to slide. No, it does not. No, it does not. We could come in. Listen, as crazy as this looks right here, I'm not saying this is going to happen. It could. We could come in Sunday night and it could be in a 13-point range for 12 hours. It really could. That would screw all of the volatility technicians. Market makers always win. It's going to do it for me. This is Rev Wood. I go by SageFT. Go ahead and hit that like button, hit the subscribe button, turn notification bells on. Live trading desk, SageFT on YouTube, Monday through Friday, 8 a.m. to 4 p.m. X.com, Kick.com, the Facebook group, $ES_F. All right. This very, very momentous occasion for us, folks. We're going to be expanding, moving on, moving up into bigger, better things. We're going to move this from a home studio to an office. May 1st, I have signed a lease for May 1st. We will be rocking and rolling. So those of you that have been with us since day one and have dealt with my awesome upload speed from my internet service provider, I give you a star of valor for your bravery. And so that will be fixed. So those of you that are dealing with the buffering issues and the latency on the streams, we apologize in advance. We are fixing it. The new office has fiber. Can't get fiber at the house, so I'm going to go get fiber at an office. Bringing up the point, the real estate market has absolutely collapsed. I literally got an office for 75% of what they were asking. Literally. I'll see you guys tomorrow morning. Good night.